Now, you've heard me before speak about Lake Resources. You've heard me before say that this is a really big deal in the lithium space. So I've asked Steve Prominence, their managing director of Lake Resources, to come back, give us a wrap up for the year. But there's some really exciting news coming into 2022 as well. For those of you that don't know, Lake Resources have got a Carchi project over in Argentina in the lithium triangle. But not only that, they've got 3 more projects that are going to come on stream. Plus, everybody knows right now we're talking about electric vehicles going away from the internal combustion, massive demand for lithium. But more importantly, and this is what I'm going to get Steve to explain about with Lake Resources, more importantly, Lake Resources have got one of the highest purity products, which is going to cover that ESG area and that sort of the demand for that really clean lithium project, which very few other companies have got. So I'm pumped. I'm excited. Sit up, take some notice, and give a big warm welcome to Steve Prominence. Good to see you. And you've been away. So welcome back to Australia.
Thank you very much, Kerry. And it's always a pleasure to be on here. And for any of the people who've been following Lake Resources, thank you very much for your support. We've had an absolutely transformative year in 2021. Not only has our share price and our market value increased in line with the whole increase in the lithium sector, but as a company, together with a capital raising we did in January, we've been able to move all the way through to being months away from having a definitive feasibility study, months away from having debt finance available, offtake agreements, and looking at developing the next project and becoming one of the top 5 global lithium producers, but one of the only ones with a high quality product that ticks the ESG box. So it's been a transformative year, and we're looking to have a major 2022.
I want to get into the major 2022, but before we do, you mentioned ESG. Now, that's becoming more of an issue and more important, isn't it, Steve, as we go down into this, I guess, this clean transformational energy. So when you talk about your projects and going into that supplying of lithium, what makes Lake a standout, and is there anyone else that comes close?
All right, so first of all, most of your viewers probably know that with the growth in the electric vehicles, there's naturally a massive growth in batteries and the battery materials that go into it. And although lithium is not a rare commodity, there are just not many projects coming to market over the next 5 to 8 years. And so there's a real opportunity right now. Benchmark recently just said that that demand is running right now at about 3 times the rate of new supply coming on stream. So there's a real supply gap there. But not all lithium is created the same. Lithium that goes into cathodes for high quality batteries, a lot of it needs to get reprocessed. And the benefit of the process that you mentioned, we use direct lithium extraction together with our technology partner, Lilac, is that we produce a high quality product on site, extremely high purity, low in impurities. And so that can go into batteries. It doesn't need to be reprocessed. So that margin, if you like, is captured by the company rather than passing it to somebody in the supply chain. And the key thing is, so that the quality is what battery makers, cathode makers are looking for. But what's actually driving the bus, or what we say the pull in the economy, is electric vehicle makers want and need to deliver on ESG outcomes. In Europe, for example, they must deliver on low carbon footprint. They have no other options, and if they don't, it's a fiscal financial penalty to them. So they're not just want to do it because that's what the consumers are after, but they need to do it for better financial outcomes. And so when somebody like us can come along with the, let's say, 100 different inputs they have to put in an electric vehicle, and they can see both a high quality and an ESG benefit where you've got a significantly lower carbon footprint, but at the same time, lower water usage, better social outcomes, lower land footprint, actually looking across the E and the S of ESG, we can actually deliver that. And we can deliver it at a cost competitive rate with a process that's scalable. And that issue about being scalable is very important for the end user as well, because an electric vehicle maker, just like a battery and a cathode maker, doesn't necessarily want to have 10 different providers of one product. They would prefer to have 2 or 3. And so if you can scale up your product, which they know works well in batteries, which ticks that ESG box, and I'm not talking greenwashing, I'm talking orders of magnitude difference, then you become actually relevant and meaningful to them. And they're the sort of conversations that we've had with offtake partners. And I must say on that, we've just been fortunate that with rising lithium prices, that we didn't actually sign an offtake agreement, because those prices continue to improve, and the scarcity of new lithium product coming to market anywhere in the next 5 to 7 years. We counted 5 projects that haven't allocated their offtake yet, and we're one of them. So, we're in the movie industry, we're getting a callback.
I love that. I love that. I love that. So are you going to hold off on that offtake, because you don't actually need to do that at the moment? Let's talk about what's going on, because we're coming up to Christmas at the moment. Steve, you've been over there, you've just got back. Tell me what you were doing over there, which is becoming transformational for the company.
Well, for anybody that's been in Australia, after 21 months of lockdown, it was great to be able to get back and actually see the team, a number of key members that we've hired through Zoom, for goodness sake. And so actually being able to allocate those tasks, bring the whole team together, talk about not just what we're doing now, but how we're going to expand our team, how we're going to deliver through the feasibility study, through construction, into production. What other resources do we need? What else do we need? That was a key part, just getting that team back together. A second key part of this trip was to talk to our financiers. Some of your viewers are aware that we've had conversations with export credit agencies, and in a sector that is not known for debt, which is lithium, and in a country which is not known for debt support of projects, which is Argentina, we've actually been able to get export credit agency support from not 1, but 2 countries, from the UK and from Canada, together with a panel of international banks who were very keen to support us. We had a due diligence team come out on site, and they didn't just look at the site, they talked to local communities, they talked to local regulators, they wanted to get the full gamut of the issues that could be potentially there, and they were absolutely thrilled with what they saw. But the thing that I really took away, that they all said, was that we couldn't believe how big the project was. Now, I grew up on a farm, 75,000 hectares, that's a big block of land. But they simply said to us, listen, everything you look on an A4 sheet or a PowerPoint presentation, it's only when you turn up on a 4-wheel drive and you say, right, from here on, pretty much everything you can see, that's our project, that's what we're going to be delivering on. And we're drilling down in that bottom corner there of what looks like a massive swimming pool of brine. So,
and that's just the start. And this is how much bigger this can get. Right. So you spoke a moment ago about scalability. How easy is it going to be to scale this up? Because we've said the demand is there, the supply isn't there. Lake Resources can do that supply in an ESG environment to a very high level with a good pedigree. How scalable are you?
The great thing is we've got a big project. Yep. And even back in 2018, we demonstrated that just by drilling laterally, by drilling at depth, we can expand the resource. So having a big project is important for that. Then having a technology with Leilac, whereby, because it's modular, all we do to increase production is to have more production wells and to have more of their ion exchange modules that basically just fit click, 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 side by side. They're almost a plug and play unit now.
Wow.
The demonstration plant we're going to have on site. So that part of it is actually quite straightforward. And then instead of having evaporation ponds, because you're using this ion exchange process, you're producing your product in hours. And if there's a problem with the ramp up or what have you, you're going to be dealing with it in days or certainly weeks. It's not like you've got to wait a year for your product to be evaporated and then process it and then see if there's an issue. So we're going to ensure that we deliver a very high quality product to our end user.
And so you can scale it up, you can make it bigger fairly. As demand comes in, you can say, right, let's click another module on.
So our announcement today, when we talked about the drilling results, we'll have more announcements in the future detailing those results. But really, the key takeaway was that the drilling is showing exactly the same results. We will continue to deliver more results of the same. We can scale up the project to suit. We had initially identified 25,000 tonnes per annum. We're going to be moving to 50,000 tonnes per annum. And to put that in context, 25,000 tonnes per annum was about 6 or 8% of the market last year. But moving to 50,000 tonnes per annum, that puts us in the top 3 global producers. Presumably the other producers will also scale up, but will at least
they don't have
the global producers.
So, sorry, Steve, they don't have the ESG credentials that Lake have. Is that correct? The other producers?
That's the key difference. And we know that from our next door neighbor. They just increased their offtake with BMW. That's great. But we know that we can produce better quality product more quickly with a lower water use and a better social outcome. So we're certainly very well positioned. And I must say that at the moment, the market is sort of looking more at the pricing of lithium increasing. I understand that. But at some stage, certainly from a selection process, you imagine if you're a global automaker and you can get a high quality product and that it also delivers on your ESG outcomes, you're always going to preferentially take that. And with time, you're going to see that Lake will also stand out preferentially amongst our peers and being able to deliver a high quality, consistent product that ticks those ESG boxes, but in a meaningful way.
Steve, along the way at the moment, it's all the talk for Lake Resources has been around the Kachi project, which is only one of your projects. You've got another, 3 or 4 projects. Now, the announcement today says you're going to start doing some drilling at Olaroz, Cauchari, forgive me if I got that one wrong, and Paso. Why is that important, and why is that potentially a game changer for Lake moving forward?
Okay. So we spoke about the fact that there is a massive amount of demand growing much faster than new supply. We talked about how the equity markets are open, so we can actually get equity if it's required. But what we also mentioned is that we're able to tap on debt markets for lithium in Argentina. So with those 3 things, then all we need to do is deliver on our current project and then bring the next project along. When we're talking to off-takers, they want to buy everything that we can produce for the first 5 or 6 years.
Wow.
And then once we've spoken about our first 25,000 tonnes and an expansion to 50,000 tonnes, the conversation then goes on, and do you have other projects? Well, yes, we've got another 3 projects. So it's actually, again, that demand pull saying, let's get the next projects going. And all we're really talking about is engineering, some technical issues, and delivering these things. So we're now basically head down getting the next projects up the curve. And the great thing is, because we've done all this test work, and we've done this work on pre-feasibility studies and definitive feasibility studies, we can cookie cut that and basically roll it out onto the next project. And we'll be able to bring those to market more quickly. It's a pretty exciting time. It's very rare in any sector that you can go from a standing start, albeit we've been at it for 6 years, but almost a standing start to becoming a major global producer. And this is a generational change that's happening across the world. What's happening now with this energy transition with electric vehicles and then with autonomous vehicles and charging stations, this is going to affect how we live our lives, and being able to participate in that in a meaningful way. Some old greyheads putting their sage advice, I hope, or at least their cynical approach together with some youthful exuberance to actually deliver these projects. It's a fun sector to be involved in. I actually feel honoured that we're able to participate in it.
I think it's fantastic, Steve, but let's talk from a shareholder point of view, from an investor point of view.
All right.
Funding, money in the bank. You had export credit agencies, but you've also had the banks coming and saying, look, we can give you money as well. Tell me how you're going to fund the project.
All right.
And
let's break it down.
Let's break that down. But also I want to know, are you going to have to raise some more equity, or that's dilution to shareholders, or give us what that's looking like?
So on a here and now basis in December, we've got about 70 million in the bank. We've announced that with our partnership with Lilac, they're going to bring about US 50 million to the project, the equity. So we're short about 50, 60 million US. Now, the in-the-money options that come due progressively, that come due in June, they'll progressively convert. That brings another 60 million Aussie. So yes, at some stage, we'll raise an amount of money. I don't know, maybe that's $50, but we're only talking a small amount of additional equity. This project is basically funded. Then on the debt side, that's 70% of the finance. So on the current capex of 550 million, that's about 380 million US. The export credit agencies are good for that. And of course, we have to say that it's indicative, but I have to say, after both the site visit and meeting them in London, they're keen to support this. They're keen to support the expansion. And I firmly believe that if we get the next project up, we'll probably be able to tap that as well. So that's pretty exciting. Right, then on the offtake side, as I mentioned, that we're one of maybe 5 projects coming to market in the next 5 or 6 years that hasn't allocated its offtake.
Yeah,
that's as rare as hen's teeth now. As I said, we're getting callbacks. We've been looking for a rise and fall pricing mechanism rather than just a flat price.
Yep.
And some of our peers have gone and just locked it away on a flat price. And look, I understand that. But if you don't have to, why would you do that? That's one of the reasons for partnering with Lilac rather than selling half the farm to somebody in the supply chain. We can actually become a truly independent producer that can scale up. And that margin is actually captured by the company and therefore to the benefit of the shareholders. Let me give you an example. So we're now in December. Based on some of the conversations we've had in the last few days, we would reasonably expect that fairly soon, and certainly by the middle of January, we're going to see sale contracts, spot pricing going through the market at somewhere around US $40,000 a tonne for a premium hydroxide or carbonate product.
Where was that pricing a year ago, Steve?
So that pricing a year ago in December for low quality product was in the $3,000 to $6,000 a tonne, and in premium product was about $6,500 to $9,500 a tonne.
Goodness,
we're now going to touch $40,000 a tonne 12, 13 months later. So that is spectacular. You put those sorts of numbers into our financial model, we would have free cash flow, not just revenue. We'd have free cash flow in 1 year that would be the same as our current market value. Now, I'm not saying you would do that, but even if you just used, I don't know, $20,000 a tonne, which is certainly backward looking, we can, through our expanded project, that would be 1 year of production equivalent to our current market value. So
let's talk about that a little bit, Steve, because there are those out there that say Lake Resources, it's had a very good run and it's fully valued. I'd love you to unpack that. I mean, I know you have a little bit just now, but let's unpack it a little bit more, because I think it's really important for current shareholders, but also those people that are investors out there that are looking at Lake to understand that the value proposition is still there. So can we unpack that a little bit and do some numbers around that?
Well, let's do some simple comparisons.
Yeah.
If we compared with current producers and we looked at, and I don't like to mention names, so for any listeners, I have nothing against these companies, but just from a sheer comparison perspective, we look at Orocobre, recently rebadged as Allkem due to the merger with Galaxy. So they're producing about 16,000 tonnes a year of industrial grade product out of Argentina, and they hope to expand that. And they have about a 5 billion Australian market value. If we look at our nearest neighbour, Livent, they're producing at about 16,500 tonnes per year. And now that's very high quality product, both carbonate and hydroxide. They have a market value of about 5 billion US on the New York Stock Exchange. We're going to be producing 25,000 tonnes per annum in 3 years' time. You've already heard that most of the financing is in place, or certainly indicatively in place. So there may be a small top up, but that's about it. So it's not like there's some massive dilutive capital raising coming. If we're not at least 5 billion US in 3 years' time, then we're doing something wrong, because we're going to be producing more product, and a very high quality product that the market wants. And then with the expansion case, well, you can multiply that by 2. So that's a heck of a long way from where we are now. Now, I don't want to appear arrogant, because we're very grateful for the support we've had from shareholders and from the market in general. This has been a transformative year, 2021 for us. But as we look forward, there's absolutely no reason why we can't be 5 or 10 times where we are now. And that's just on Kachi. Now, if we then add another project, if we then add another project or 2 that we're looking to drill and bring up the curve, you know, there's absolutely no reason why we can't be a top 3 global producer. And that's really going to shake the tree. Now, I have to say that that chair is not really ready for us around the table. While those guys are having their little Christmas party, they're not very happy with us coming along and presenting a much better looking turkey to the people on the table. They don't like that at all. They would rather just have their ham and celebrate with some champagne and say, thanks very much.
Yep.
But in a way, we're messing up their little party. And the thing is, we're not trying to mess it up. There's room here at this table for everybody, because all of these lithium projects have to come to market, and then some, and then some again.
Yep. Yeah.
And the crazy thing about what's happening is that we're seeing EV makers who, look, bless their cotton socks, they're focusing on the new models, they're focusing on the software and the agreements they have for battery packs and making certain that's in place. And it's only been in the last few months that the penny's starting to drop. Oh, what if we don't have the materials going into those batteries? Oh, that's not my concern. Well, it damn well will be.
It will be.
And
talk to me. So, Steve, sorry to interrupt you, but talk to me about how quickly. I know. Listen, I know that it's mining. I know that it's, you know, there are processes to go through. But when it comes to supply demand, and there is a gap there, and you've got a very high purity product that will be wanted by the market, how soon can you gallop that into the market? Because I've heard numbers like 2030, which is what, 8 years from now. What are we talking about?
We've spoken about Kachi coming online in 2024.
Mm-hmm.
We'll probably do the expansion with the first 25,000 tonnes and then the second up to 50,000 tonnes indicatively within 2 years. So that's 2026. Probably in tandem, we'll bring along another project. So that's probably 2026 as well for another 25,000 tonnes. So our aspirational target would be to be producing at least 100,000 tonnes per annum by the end of this decade. Now, again, that may sound like a very big push, given that we're not producing any at the moment, but there's absolutely no reason why we can't do that. And that sounds like a big push, but these sorts of opportunities don't happen very often. Let me give you an example. Back in the early 2000s, I was working with this little financial firm called Citi, and we would drag investors kicking and screaming up to China, saying, China's really booming. This is going to happen. It's going to impact on iron ore prices. It's going to impact on metallurgical coal prices. Heck, even the waste paper baskets are made out of stainless steel. It's going to impact on nickel. And it was so obvious that that growth was there, yet it took time to convince people this was happening.
Right.
And it's because it's so different. And in the same way, this is transformational for all of our lives. But from an investor perspective, you don't necessarily want to take that risk, or you might be, wanting to hedge it or what have you. But the reality of what's occurring, everything is happening faster than everybody expected. And so we also need to respond in the fastest way possible.
Absolutely.
And for the first time in my professional career, we're seeing demand are blowing the right way. We're seeing equity markets opening up. We've actually got debt supporting us, and we have a series of projects. We don't have to go and buy other companies to do so. This is a pretty rare opportunity, and we're going to deliver on it.
The most excited I have seen Steve Prominence for a long time is right now, ladies and gentlemen. Now, you've had a fantastic 21, Steve. We're running out of time. A couple of things I want to hear from you. What do you think are the main, I guess, catalysts for growth with Lake for investors in 2022?
Right. So we have to do our bread and butter issues, which is deliver the definitive feasibility study, environmental, social impact assessment, and then through that, we'll at least announce at least one of the offtake agreements, and through that, that will trigger the debt. So that is a very solid piece of support. And the market expects that, but even when we do that, that will, I think, possibly be a surprise. Then on top of that, when we talk about who the offtake partners are, depending on who they end up being, I think that will also surprise on the upside, because we are looking for something strategic long-term. Then with the demonstration plant on site, I think that will quell the nervous Nellies around the technology. To be honest, the technology doesn't keep me awake at night, and the same with Lilac. Heck, we've run 50,000 litres of brine through that pilot plant in California. We're about to run another 60,000 litres to deliver all of that information into the DFS. We're going to have a demonstration plant on site, which, as I mentioned, it's almost like a plug and play 60-foot containers side by side, and we're just going to have more of them when we go into production. So that doesn't keep me awake at night. But I understand the resistance in the equity markets, and I think that will help. Further, when we actually clarify to everybody that low cost, when that long dated low cost debt is coming, I think that's going to surprise people. They don't believe me when I say 11-year debt, and the weighted average cost of capital of that will be less than 3%. I mean, the whole market is worried about inflation, and with that will be increasing interest rates. And here we are going to lock away long-dated debt at low cost. That's going to put us in a competitive advantage. Then as we roll out more results,
Steve, is that debt locked away now, or are you still working on that?
I have to be careful what I say here. It's never locked away until everything is signed up. But I have rarely seen project debt providers being so enthused about a project. A couple of them wanted to repitch to us so that they could be involved. That should give your listeners an idea about how keen the financial sector wants to be involved in this. And then as we roll out results from our next projects, then people can see, oh, this isn't just a one-trick pony. This is going to be a multi-asset global lithium producer. And we're going to do that because the market needs it. It needs a new independent provider. When Andrew Forrest came to the market with Fortescue, there was just 3 companies that controlled that iron ore space. The demand for an independent producer was there. In the same way, we're seeing China having a stranglehold on anodes, on cathodes, and on battery supply. So seeing an independent producer to provide diversity of supply of a high quality product that's actually qualified as battery quality, that's going to resonate as well. So there's a lot of news coming down the pipe into Q3 next year. Next year is going to be another transformational year for this company, and we'll probably then include getting uplisted in the US as well, and that will bring in a broader range of longer term investors from a much deeper capital pool to augment the quality of support we've already had here today.
Yeah, well, the shareholders in Australia have been very supportive. I know that, and I was going to ask, is NASDAQ on the horizons? And I guess that's a natural thing to do further down the track, yeah?
Absolutely. The thing is, everybody wants to list in the US. I'm not too certain what the timeline is, but sometime next year could reasonably expect that to occur. And it just bolsters the story, because they understand climate tech there. There's a reason why Lilac has been able to tap climate tech and tech investors out of Silicon Valley. It's because they can see the ESG benefits. They can see the benefit of bringing new technologies to the sector. And tapping that money, we're the first time that we've seen that clean tech, climate tech money coming to the upstream end of lithium supply in these batteries. And we're the first time that we've brought in large volumes of export credit agency support, not just a small amount. So look, we keep doing new things, and there's going to be more new things in the new year. It's certainly going to be a very positive one for Lake shareholders. And look, don't take it from me. Just look at the quality of investors that support Lilac. Just look at the fact that Canada and the United Kingdom are going to put their money into our project, a little old lake in Argentina. And that tells you that this thing is happening and we're getting the right people involved.
Okay, Steve, it's been a really great chat with you, but I always finish off my conversations with, I want you to give me 3, and you could probably give me 33, but let's just whittle it right down to 3 reasons. 3 reasons why investors should be sitting up and really taking notice of Lake Resources as we head into 2020.
Number 1.
Yep.
Lithium pricing will continue to go up. Now, that's not because I know, it's just because if demand is increasing at 3 times the rate of new supply, lithium pricing will continue to go up. But when you're looking at all lithium companies, they'll all do well, but we're able to produce a very high quality product with a meaningful low carbon footprint, low water, low land usage, better social outcomes. So that's what the end user actually wants. And the consumer will be driving those sorts of outcomes for electric vehicles. So that's one reason to buy Lake versus others. The second is the fact that we can actually scale up to be meaningful. There's absolutely no reason why we can't be at least a top 5, if not a top 3 global producer. And once you become that, then it's hard to kick you out of that spot. The reason we can do that is because of the size of that demand, we can become an independent producer and fill that gap. So just imagine 3 years' time, people go, oh, wasn't that a great investment? We got involved in somebody that's now part of the ASX 100. They're listed on NASDAQ. They're a major player here. Yes, you've got to have that vision. And it might sound arrogant, but we've actually got all the cards here in our hand to deliver that. So that's the second reason. The third reason is perhaps a little more nuanced. If you look at some of the financial outcomes of our modeling, we talk about our pre-feasibility study, we talk about what we expect in our definitive feasibility study. You always want to invest in something that's going to have a high margin return.
Yeah.
When we were using backward-looking numbers around $15,500 a ton, this produced a very robust financial outcome. With the way lithium pricing is going, this is going to just throw off cash. And when you've got a lot of free cash flow coming, that gives you optionality to look at alternatives in the sector. We're not just trying to be yet another raw material supplier. We're actually trying to embed ourselves strategically into the long-term future supply chain. And so as electric vehicles grow and we see them all around the world, we've actually got an offering which is almost unique to those electric vehicle makers. Here's a product that suits. Here we're working with these cathode makers, this latest technology. We'll work with other key participants. You tell us who you think, we'll tell you who we think, and then we become part of that. And once you become embedded in that, that then provides you optionality. If the technologies change, if we need a different product, we can do that. And so we're actually going to have optionality there for the future. And so it's not just a short-term return. Oh, lithium's gone up, I'll flog this off and get into the next thing that looks hot. This isn't just some meme stock.
It's
this is actually where the future is going. This is a generational change. Yeah. And I feel honored that we're one of the few companies that actually can fill that gap meaningfully.
Steve Prominence, it's been absolutely fantastic to chat with you today. I wish you all the best. It sounds like 2022 is going to be one to watch. They're only just getting started, ladies and gentlemen. They've come a long, long, long way. But I think the most important thing... Sorry, go ahead, Steve.
No, it's going to be a cracking year. I really want to thank all of the Lake shareholders that are listening. I really want to thank them for the support, not just from me, but from the board and the whole company. Without you, we couldn't have done this. I'm pleased that you took a big take up in our bonus option issue. That was really meaningful and an opportunity for have you involved, not just our fund managers as we move forward. And I do want to take this opportunity to wish you all the very best in the holiday and festive season. It has been a big year. I know some of you are almost tired because there's been so much happening, but brace yourselves. Next year is going to be even bigger.
Whoa, you heard it from Steve Prominence himself, Managing Director of Lake Resources. Next year is going to be even bigger. I want to congratulate you on all the hard work. Well done on getting over there, seeing the team, managing to pull all this together. And yeah, lots of news flow coming out, ladies and gentlemen, lots of news just then. And I think the most important thing to take away from me is that low carbon ESG component that only Lake Resources can deliver.